In this video, I will explain about the importance of thinking in probabilities and not in determinism. Most likely, you have heard so many different opinions that right now you don't even know if you are thinking in probabilities, possibilities, or determinism. Determinism just means every event has a cause, which in physics is known as cause and effect. Determinism has the idea that reality follows a sort of predetermined path. Determinism is related to the idea of causality, the relationship between cause and effect. Under certain conditions, an event will cause an outcome. Let's take a human example. Let's say you're driving down the road and a person in a car is coming towards you, texting on his phone. The driver doesn't see you and you swerve to miss the car but hit the neighbor's mailbox. The cause of the accident was not that you swerved, but that another driver was on a cell phone while driving. The effect was hitting the mailbox by avoiding hitting the other driver. In another example, let's say that you have a bucket of water and you put it outside on a below freezing day. What will happen? The water will freeze. Under these conditions, this is the only possible outcome. And these examples are quite different one from the other because of the quantity of different variables. But determinism people, if not aware, could believe that the exact same outcome would have happened no matter who was driving the car, the same as who was putting the bucket of water outside. The deterministic belief is that the outcomes of both these very different scenarios are predetermined. Now, probabilism means that we either don't have or can have all of the information to assess the specifics of an event. So we have to assess a probability. For example, if we roll a die, we don't have all of the specifics of the way the die was flung, the weight of the die, the surface of the die, and the surface of what the die lands on, the specific gravitational force, the air pressure, and so on, in order to figure out what it will causally land on. Our lack of knowledge means we can only assess probability of 1 in a 6 chance for each number. In other words, probabilism doesn't necessarily imply that each of the options 1 through 6 are actually possible. Only that our lack of knowledge of the only possibility means we need to assign a probability. That is, a range of likely outcomes. And this is where it's very important that you realize that price can only do two things, goes up or goes down. Those are the only two outcomes that can happen based on a specific point of reference. Probabilistic sciences are those such as psychology and economics that deal mainly with phenomena that are not perfectly predictable and with causes that are generally neither necessary nor sufficient. For example, attractive people are generally responded more favorably than unattractive people. But not all beautiful people are well liked. And good looks are not requirements for winning another person's esteem or affection. Deterministic sciences, on the other hand, are those such as chemistry and many branches of physics that typically deal with much tighter phenomena, for which the causal connections are more often necessary and sufficient. For example, to increase the gravitational attractions of two objects of given mass, it is both necessary and sufficient to move them closer together. The understanding of determinism and probabilism is one of the main causes that people treat unconsciously trading as if this activity was a deterministic science, where you have determined causes and effects. And this is why, when you begin the trading journey without being aware of it, you are approaching trading like 99% of people, trying to learn everything already established as if you are studying to be a chemist, an engineer, or a lawyer, whose sciences are deterministic. And without understanding this difference, you are prone to learning a bunch of information and rules that you assume are necessary for success, when in reality, trading will be more of a probabilistic science, sort of saying, because in reality you never have all the specifics to really know what is going on behind the charts, why price is rising instead of falling, and vice versa. In reality, nobody has concise and real reasons of why. In other words, the true cause and effects that is necessary for real learning. As human beings, we are prone to faulty reasoning and erroneous beliefs, and they cannot be eliminated. People will always be tempted to the idea that everything happens for a reason, and what happens to us is controllable, and also tempted to oversimplify beliefs and hold them with excessive confidence. Therefore, we get generalization. And this is one of the problems I wanted to get at. The trend is your friend until it bends. Plan the trade, trade the plan. Support becomes resistance, resistance becomes support. Have you heard those? But the same support will become the resistance? Would it always be the most recent one? If it becomes resistance, would it indicate it always with the same form patterns? Sometimes it only reacts, and sometimes price just goes through it as if it didn't exist. Therefore, is there a way to really know when one or the other will happen consistently? Generalization becomes a problem in an activity that is uncontrollable and uncertain, and where you as a retail trader do not have real information, and therefore you do not know what is happening right now, and therefore you do not know what will happen. Generalization is a quick tactic people use when talking about ideas and reasons they believe is causing or will cause something. If you want to start pulling ahead and have a better chance at succeeding in this trading activity, you need to be aware of this and stop this generalization. You will find this everywhere. People generalize all the time about the markets. Awareness and training are key to avoid falling into this trap, because 95% or more in trading is mental, which means 95% plus of the problems are inside your head, not outside in the charts. The problem is not the markets, the forms, the randomness, etc. The problem starts with how you perceive things. And it is the same for the others and for everybody. Nobody's exempt. And it doesn't matter if that person is called an expert. Therefore, it's imperative that you understand how to trade in the most objective, clear, simple, and specific way possible. One of the most liberating understandings is that, in fact, you do not need to know everything that is out there to make money, but concentrating on one single thing and specify rules to that specific one thing. There are hundreds and even thousands of trading indicators, hundreds of chart patterns, hundreds of candle formations, dozens of theories, and millions of possible combinations between all of them. Do you begin to see the problem of generalization? Do you realize why trading can be treated as a science and education about how the markets supposedly work? Do you realize that it is not really education but beliefs and generalizations? When you develop the skill to trade in the present and only pay attention to the right side of the chart, you naturally stop generalizing and therefore will be free of beliefs and ideologies, because since the right side of the chart is formless and is the same in any time frame or chart type and is in the here and the now, the only thing left is following it and not assuming, predicting, deducing, anticipating, and all those actions that are based on cognitive biases, subjectivity, that therefore make you more prone to trade emotionally. When you come to trading and automatically start studying theories like Elliott wave, Fibonacci sequences, or price action, or any other idea that became popular, are you aware that you are receiving a second-hand information? Maybe even third, fourth, or eighth-hand information? Why is this critical? Because you are getting information with no basis in science, full of beliefs, ideologies, cognitive biases, agendas, and generalizations, instead of paying attention to the right side of the chart, which is price, which is never second, third, or sixth-hand information, but it is the same information right here and the now for everybody, no matter what is in our heads. You have heard of support becomes resistance, resistance becomes support, the trend is your friend, and the crossover, the uptrend, downtrend, etc., etc. And one of the things that I'm going to talk about, so you are aware of what I mean by being deterministic or thinking in possibilities and thinking in probabilities, which is a very different thing that a lot of people confuse it and are not aware of it. For example, this is a strategy, this is a system or method, whatever you want to call it. In other videos, if you want to subscribe, I'm going to just give you the parameters so you can check it out. In Trading with Logic, we don't follow this type of strategies because we understand that you have to get trained to be aware of principles that this method has, that the other example I'm going to show you has. And once you understand the principles that every method, system, or strategy is derived from, then you're going to have a better understanding and a better sense of adaptation. Because if you are just looking for a strategy, you have to think about something very important. How many combinations are possible? Even with these indicators, how many different parameters they can have? And depends on what time frame you're using it. There are dozens of different time frames. There are thousands of indicators. There are hundreds of different formations, candlestick formations, different types of charts, different theories. So if you think about it, how many combinations are possible? And I'm going to explain that in another video. Now, if we understand something very simple, that any strategy at the end of the day is going to have some steps that you have to follow. Most people are looking to memorize the steps. A lot of people pay attention to, I'm going to show you my strategy, or check this winning strategy, because it's a simplistic way to think that if I am just obedient, that means being disciplined. But that's a completely different story. You can be obedient, but if you don't understand the reason behind that obedience, then it becomes indoctrination. And indoctrination creates an ideology. An ideology doesn't allow you to change, to adapt, to apply differently depending the circumstances. It just gives you like a tunnel vision where you don't see anything else but that strategy. And you see it as a finite game, like it wins or it loses. If it loses, then I change and I find another strategy. But how many strategies you can try out and try out? There are thousands. Now, let's talk about this one. Just a quick explanation of how this works. You have two moving averages, the Dunking channel and this RSI. If you can see, the moving average crosses over the slowest one, which is the blue one, right there. The steps of the strategy are, once it crosses over, then the next candle you sell. So it means that you're selling right here when this one closes, and your stop, you want to put it above here. Now, as you can see too, the RSI is going lower than 50%, and obviously is coming from the top of the Dunking channel to the bottom. So those are the rules, right? Sounds very simple. All you have to do is just sell when you have the signal, the price is going to go down. And the take profit can be, different reasons. It can be percentage, it can be a specific risk reward ratio, or it can be just like support or fractal or whatever, or until it crosses over again, back from south to north in this case. And as you can see here is when it's crossing over, and the next candle you can buy and your stop can be below this one, which as you can see is below the moving averages. You give it some space and then the price can go either up or come back to the south and then take you out. This case, the price goes up. Now the signal, you have to wait until the price crosses over, and same thing. Now let's go to this way of looking at the market. The price makes this movement, then the price retraces, breaks this trend line, the price breaks this trend line. You have a 618 retracement with a Fibonacci tool, and there you have, let's say, a buying opportunity. And your stop can go below this area or can go below this area, right? So there are different rules that people can just make up. Why it will be better here or will be better here, etc. Now, I want you to understand that there are several steps that you have to follow and you have to memorize. You have to look at the market at a certain way. And once you follow those steps, there's going to be a trigger point or a trigger signal, just like here. So it crossed, closed, and that's your signal. You can start buying. Now, what I want you to observe is that if I just get rid of everything, I'm going to leave this here as well as this one, and I'm going to get rid of the indicators. So now I don't have any indicators, but I have the trigger signals. If I put these two lines, I can signal or mark where the signal started and where it ended. I want you to be aware of these two important numerical information, which is time, which is when did it start? Yeah, 14 GMT. When did it end? 22:00 GMT. Now you have a highest price and you have a lowest price. That in this case, in this signal, it can be the close of this candle, the close price. So now you have this area right here, which is a space. Why a space? Because remember, a space can be filled with anything, just like in a video I explained earlier. If you can look it up in this channel, you have a space of 52 pips. The same thing as the other example with Fibonacci. If I get rid of the Fibonacci, the trend lines, let's say the whole pattern is this one. There you go. You have your signal. You have a highest price and then you have the lowest price, marking the whole process of creation of this pattern. What happened? You have the start point, which is 2 GMT, and the end, which is 6 GMT. Highest price 1761, and this is the lowest price 1688. So 1688 and 1761. Now hold that thought right there and look at where the price is right now. It's above this coordinate, because in reality what price does, price with time, it gives you a coordinate. That I want you to be aware. I'm going to go up and now I have this square right here. Look how I am highlighting these prices, the 120.40 and 120.00. Now this is a 4-hour chart, and if I measure this space from here to here, right, so you can see on the left side is from 120.00 to 120.40 is 40 pips. This is a 240 chart or 4-hour chart. Now the beginning is the same beginning, same time, the same beginning and the same ending. Now if I switch and I go to a lower time frame, let's say I go to a 5-minute chart, I have the same price as you can see here, 120.40, 120.00. If I measure this space from top to bottom, you can see again 120.40, 120.00, 40 pips. The space is the same no matter what time frame I'm looking at. If I go to a 480-minute chart or 8-hour chart, I have the same 1.20.00, and if I measure from here to here is 40 pips. If I go to a daily chart, as you can see here, you have the same distance or space, which is 40 pips. So now that I have this space or this void, in reality, let's say that price goes up like this, or 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 like this. This space continues being the same. It doesn't change, and it's the same in any time frame. So what is going to constantly change is the waves, the form, and therefore the interpretation. But in reality, what you're looking at and what most people are looking at in teaching is possibilities, because then your brain is going to value more maybe this movement than this movement, or maybe you're going to become more reactive to this movement than with this movement. Subjective value is going to be different depending on whoever is seeing the market, and what you're going to be looking at is information based on what you have heard, not what you're looking at in the present, in the chart. Now, two things can happen regarding the way the price moves to the north. It can continue or can change. So this area right here, if you look at it, any area that you look at it has two probable movements, either up or down. It can move different waves or different ways, but the same probability stays. Can continue or can change. Just like in the example of the bucket of water. If you put a bucket of water outside on a below zero or a below freezing temperature, the only probable result is that the water is going to freeze. Just as if you select any space, just like here, in the examples we were talking about, the strategies, price can only do two things: go down or go up. Now, remember that we were talking about a finite game and an infinite game. When you're observing this with the strategy, your mentality is, oh, it didn't work or it worked. But if you pay attention, even to the signal given to this strategy, the one with the indicators, the price has continued a process where it went down and that went up. Now, two things can happen right now when you think in probabilities: either continues or changes. The same is true with this other space. This is a signal where it started, this is where it ended. You have a highest price and a lowest price, which, remember, the information on the right side, which is price, is always going to be the same no matter what type of chart you look at. It can be volumetric, can be tick chart, or can be candlestick formations. Doesn't matter. It's the same exact information. It's a numerical information, time and price. Two things can happen: the price can only go up or come down. So this is one example of thinking differently when you actually pay attention to a specific information, and then your brain gets trained to think in probabilities, not more in possibilities. Because based on the information and based on the things that you hear, well, the market could have moved in this way, which has been doing, but also could have moved in this way. Now, the interpretation from here to here is going to vary. People can see it as more of a trend. This can look like a thread of changing the whole up movement. The ideas are going to be different depending on who sees the same exact information, which is price. But obviously, the interpretation based on the ideas and the forms and the connections are a problem with the human mind, because the human mind, right, has some advantages out of trading, but those same advantages are a disadvantage, which is thinking of the past and imagination. Thinking of the past outside of trading helps you to make less mistakes because you have a more controllable life if you're making the decisions. And imaginations helps you to create, to solve problems in a different way with different ideas. The problem is that when you come to trading, they don't matter because the price doesn't move because of something that you imagine or something that you think you know based on past data. So what I want you to do is, like any strategy that you're following right now, doesn't matter which one, when you're following the steps, first step, second step, third step, or whatever many steps you have, when you have the trigger signal, just mark that trigger signal with the highest price, the lowest price, when did the signal start, and when did it end. And from there, verify that these same prices are the same in all time frames and are the same in all type of charts. And from there, pay attention to what the price is at, because price is the same for everybody in all time frames based on any method. So I hope that with this, you can become more aware of your surroundings and you start seeing the market from a different perspective. Now, if you want to really get very deep into this and train and change results drastically, just contact us and we can talk about the advanced training where we really go into this, the 4 principles: price, time, probabilities, and manipulation. That's all you need because everything is based on them. Once you understand them, you don't need any other information, course, system, backtesting, and all that stuff that just makes you waste time and that are infinite because the combinations are just many. I hope this video is useful, and if you like it, please share it and subscribe to this channel. And the next time you see a chart and you're trading, remember, are you trading with the price on the right side of the chart, or are you trading with the idea and beliefs of what happens on the left side of the chart based on what someone else told you? This is Luis Morelos, and remember, trade with logos, trade with logic. See you next time.